Good morning, everybody. Hope your day went well. There's really not much to say about today's trading. I mean, it is a news day trade. If you know what the non-farm payroll number is going to be, then you got the trade. This market can react 1 full point when the news is really away from it, but typically it's going to react a 1/2 a point. Placing a scoop order 1/2 a point beneath the market does carry some risk. Placing a scoop order 1 full point outside of where the market's trading when the news hit doesn't represent a lot of risk. And a lot of people just put it there because the trading community will take profits at $1,000 and at $500. So $500 does carry some risk. You've got exposure probably of 8:30 seconds on this contract. Sometimes more, but not usually. And it's a good way to play the market. 175 to 250 is the spread. Most of it is 200, 205. Now, if it comes in, say, greater than 225, we should see the market trade lower. If it comes in less than, say, 185, the market can trade up. In any event, Fed's taper is supposed to continue. Jeff Dougherty sent me an article. If he won't post it, or he hasn't posted it in the room today, I'll put it up to show you what the reserve numbers from the Fed show, from the St. Louis Fed, and they don't show that the Fed is actually tapering in anything other than a headline. And there's a lot of ways for the Fed to create reserves in the banking system through repos, reverse repos, etc. And they're doing it. So, I mean, it's just a news day trade. So first one will be non-farm payroll. The private non-farm payroll nobody pays any attention to. It's $10,000. $10,000. It's always 10,000 greater. So it'll be 210 to 215. Hourly earnings up 0.2, and an average work week 34.4. They do pay attention to the average work week because it's directly tied into the amount of people that are hired or not hired. So number one focus, non-farm payrolls. You know what that number is. You got your first trade. Now Chris takes a trade based on the news in the note room on that first break or that first move by the contract, and he tries to get in at 50% retracement where the news hit, and then mode mean would be his third choice. You're almost guaranteed a fill if you lean against the mode or mean. 50% retracement, it's easy for trader types to do that on the run. And then if the market does not produce follow-through buying or selling given 2 to 3 hours on the financials, you usually get back to where the news hit. And then you can assess the overall impact of the news. You can see right here this 123.08 to 12 is pretty good resistance, and would be, if we can't trade above that 23.8 to 12 area, the market is pointed lower based on structure and which way the volume is moving through time. Really not a lot to say about the bond. I mean, we're in the same situation. If you know the trade, the news, you got the trade. It is that simple, and there's nothing you can do, to really change that fact. 2 out of 3 times, the market will have the estimate nailed. The consensus estimate is nailed. 1 out of 4. Sometimes 1 out of 3, the consensus estimate is way off. If the economy is weak and not really gaining strength, you're going to see 175,000 job number. If the growth is accelerating, you're going to see something north of 225. Okay, the clean break in this market is 32.16. A scoop order on this contract is 1 point away, and sometimes it can go a 1.5. So the trade that has very little risk is fading at a 1.5 away, but don't look to get filled. The trade that probably can get filled on is 1 point away from the market. If this market cannot build volume above 32.16 today, I think it is pointed lower. You can see we got a low volume number basically from 12 to 20. This is pretty good support, and the resistance starts right here. That was the last rotate up. Resistance starts at 16 to 24. So this is prime sell territory. This is prime buy territory. And we'll see how the market acts in response to that. Jeff, you might type some of the salient or copy some of the salient comments from that article and put it up in the room if you would, please. If you can do that. If you can't, the gist of the article is there is no taper. Okay, taking a quick look at gold. If number comes in less than 175, gold should rally. If it comes in greater than 225, gold should sell. This baby can move. So $20, scoop order, $20 outside of the range, probably nothing to worry about. But having said that, I have seen this thing move $30 to $40 before it stops. So it's a big contract. Eric plays it on a breakout basis. I think on big news days he's usually $2 to $3 away from when the market is trading, where the market's trading just before the news hits. And he brackets the market with a buy stop, a sell stop. He says he's never been skidded worse than 5 ticks. By virtue of the fact that I just shared that information with the room means that your first skid when you try this trade will be more than 5 ticks. It's just the way it works. Murphy's Law in operation. So very, very clean break in this market at 1,300. If we can't trade above 1,300, I think the short-term direction is down. I don't think anybody is setting major heavy-duty shorts in this contract because of the inflation that's taking place in Japan, where you can see the full effects of Keynesian economics. Right here, pretty good buying against this 75 area. So the 75 to 80 area is pretty good support. Would look to be a buyer down here, and we'll look to sell failure at 1,300, and that's about as good as you can do. That's where we are. Drew, the article. It just shows graphs where the Fed's not tapering when you get right down to it. But it's a pretty clear evidence that whatever comes out of the mouth of a government official these days, unfortunately, you just have to assume that it's deceiving. Deception is what the basis of what they're saying is. And the Fed's as guilty of it as anybody else. Unfortunately, the Fed has to pick up the pieces for everybody else, and that makes it a little difficult. They're tasked for full employment, max economic growth, and no inflation. And the Fed's no inflation to the Fed means 1.5%, 2%, which is inflation. And the Fed has been very successful at engineering inflation in fuel, and energy costs, and food costs. What they've been trying to do is prop up commercial real estate and residential real estate, and they've not been successful at doing that. The funds buy to rent properties until the housing market recovers. They've quit putting money into the real estate market, and real estate prices have quit appreciating. Okay, we left yesterday wanting to sell 15s to 25s. We had a buy at the end of yesterday at 90 to the buck, and we got a low of 95. We got a high of 20 plus. So we caught it. This market moves in a big way. The 35.50 to 36 area is really good support. Then we have support here at 50. So this will be your buy zone, 40 to 50 on the news. Obviously, if it trades down there, things don't look good for the euro, and that's what the European Central Bank goes, and 37.50 would be the sells. Be very comfortable getting off a long-term short in the 37.50 area. So you can see this bell right here was basically from 40, so this is prime sell territory, 40 to 50. I guess 40 to 50 is where buy territory is, but if the market moves down there, the European Central Bank is achieving their goals, and that's about all you can say on that. Looking at crude, crude was strong overnight. Could be the economies are really starting to grow, people are going back to work. Inflation is already evident and apparent in energy costs, so could be that. I had a pretty nice breakout at 150. This baby can move 10 handles in a blink of an eye. So sell zone up here is 102, 102.25. It's prime sell territory. This market doesn't usually react very well, big time one way or the other on non-farm payrolls, but hell, who knows these days. And 25 to 50 will be our buy zone, and we'll have to see how it goes from that. This 100, 125 you can see right here. That last rotate up was 40 to 50, so structural resistance is right here. That's your first area. And then the second structural resistance is up here at the buck 25. On the buy zone, your first buy support area is going to be down here in 50, and then the last rotate down yesterday stopped at 57, so 50 to 75 would be your second buy zone. And last but not least, the E-mini. The E-mini is pointed higher, and I think the E-mini is in one of those situations, no matter what the news is, it will trade higher. Now, it may not trade higher on the news release, but if the non-farm payroll number is less than 175, I think the market rallies because the Fed can't taper anymore, quote unquote. If it's greater than 225, I think it rallies because the economy is recovering. So pretty hard to lose under these conditions. Again, the easiest trade to see is failure to take out 87.50, just like it was yesterday. That was our trade yesterday, and the trade worked well for us. Got a high volume number down here in the 72 area, so prime buy territory would be this 73.70 area. I'd like to engage the market if possible. Selling failure at 87.50. Then the next sell will be structurally 1900 to 1902.50. So this is the easiest trade to see right here. Less than 175, positive. Greater than 225, positive. Somewhere in between, maybe sideways, just tough to say. That's all I have. We've got news in 28 minutes. It will determine the course of the day. To fully participate in this news, you have to put that position on before the news hits. There's no liquidity. You got pretty good liquidity, 10 to 15 seconds into it, but you have to enter the order. On limit orders, you cannot put a market order in. You'll get slipped. That can totally negate the purpose of the trade. The trade you got where the news hits, that would be the perfect entry. 50% retracement would be the next best entry. And then the mode mean, you're almost guaranteed to enter right here. That is fraught with risk. Sometimes it can be at the end of a bar. And then you've got to take out whatever that high or low is off the news to stay with the trade. Now, this trade requires a nimbleness that a novice or intermediate trader won't have. When you're trading in these conditions, you get in, you take the trade, you put your limits orders on, and if you don't like the trade, you flatten at the market. You just get the hell out. And if you are of the mindset where, oh, I'd like to do a little better, I can't lose this amount of money, gee, I'd like to try to get this to get out so the losses respectively, you can't trade the news. Your entry is on a limit order. Your exit is at the market, and if it's a left field, totally unexpected piece of news and you happen to be in a position that's counter to that piece of news, you've got to get out at the market. I mean, there's no way to get around it. So Chris will show you how to do that trade. You can see right now that the note is totally flat into that number. We're going to hit the number in the 29 area, 122.29 area. And I'll be back commenting on whatever the numbers happen to be. Good luck and nimbleness. Both are required to prosper in these conditions. And Jeff, thanks for putting those graphs up. Appreciate it. And again, the gist of the articles in those two graphs. And if you haven't discovered the St. Louis website, the Fed website, there's some great economic data in there, the long-term stuff that you want to familiarize yourself with. See ya on the news.